This is the MTPredictor weekly update for October 9th. Well, back to the charts. Here's the daily Dow. We've been following this one for a while. Let's just see where we progressed this week. Just kind of going back here, you see we did have our 5-wave pattern up. We got a correction back, as typically is the case after 5 waves up. You get a correction back to the wave 4 decision point or DP support. I hit that. We unfolded as an ABC pattern into wave 2, you see here. We did get a TS3 sell signal to which we call our Holy Grail trade setup down to wave 3. You can see the typical wave 3 target here. From there we unfolded as an ABC pattern into wave 4, you see here. There's the TS3 sell signal. We basically unfolded as an ABC into the minimum wave 5 target. So we've hit that target, and you see we've bounced here the last few days in the Dow. Here are your next resistance levels, around that 10,600 level, all the way up close to 12,000. That whole area will have resistance, which will basically be a correction back to the wave 4 DP, just as we had the correction to the wave 4 DP here. We could look for the same thing here. Now we still have the typical wave 5 support area, so we came into minimum wave 5 and bounced. If we don't get up into these areas and they roll over again, we may look for that typical wave 5 support area down around 10,150. So let's look at the weekly S&P, and you can see again our decision point sell signal with the target that was hit. Again, that target is a, if I put the analysis on the swing high here, you see we had a 5-wave pattern up in the weekly S&P. We corrected back to the wave 4 decision point support area. That's what the target for that trade was. And you can see we've gotten some closes below that area, and we're kind of hung up. Here's your 200 period moving average, the blue line here that's trending down at the moment. But you can see we've got a cluster. The last few weeks have just been up, back and forth, crossing and recrossing the 200 period moving average here. The danger in having taken out this wave 4 decision point support is typically when they do that, they end up retracing, or the market ends up retracing the whole 5-wave pattern up in this case. So we can take our decision point tool. We're going to click on the beginning, the bottom of wave 1 here, and that gives us a decision point support area here, right around 960 in the S&P, the ES that is. That's the futures contract. So the danger is, because we took out this area, I know we have support here at the 200 period, but if that gives way, then we could see this 960 area eventually in the S&P or the ES, and so that's the issue there. If we get back above, let's look for the wave 4 swing here. I'm going to click down at 2 up to 3. Here's wave 4. If they take out this area, the top of this resistance area of wave 4, sitting around 1245, if they close above that area on the weekly, then these downside targets you can basically eliminate, and the picture will have changed at that point. But as long as this resistance area doesn't give way, these downside targets will still be in play. Again, we'd have to see probably a close below the lows, below the 200 period here. If we get a close below one of these candles from the week of August 12th to October 7th, we get a close below those areas, and those areas get taken out, then we should see some more downside there. Again, this is big picture stuff. We can take a look at Goldman Sachs here. Again, this is struggling to try to get back above $100. And you can see they came up close to that $100 areas and rolled over again on Friday. So we'll see if they can get back above $100, then we should see those rallies in the Dow and the S&P unfold, at least to those decision point resistance. If we roll over again here and they're not able to get back above $100 in Goldman, then we could see lower lows here. Also the banking index, the BKX here. Remember, we were going off our little head and shoulders pattern that we had here. We broke the neckline way back on August, the week of August 5th there, this being the weekly chart. And we said if this low got traded below, then markets were going to be headed lower, as well as not just the banks but the general market. So that was the case, and here was the target on the head and shoulders pattern is down here, which would be down amongst your wave 5 targets. Here's your minimum wave 5 target's already been hit, your typical wave 5 target along with this major DP support, and then your extended wave 5 down here. So professional traders, if they trade these, usually look for at least a 75% move down from the peak to where the actual target of the head and shoulders pattern is. If they can take 75% of this, then that's good. So we're in that area now, maybe into the DP here. So we'll watch, we'll continue to watch that and see if this thing leads the markets lower or what we get there. Let's check on let's check gold and silver here. I pulled up the weekly chart, as we get this pullback in gold, just to kind of see the bigger picture here, so you don't lose sight of what's really going on here. So here's the weekly chart. This red line here is your weekly 50-period moving average, and the 200 period below that. So you can see in this last pullback in gold, we really haven't even tested the weekly 50 period, or this basically is equaling the 200-day moving average on the daily chart. So that's all this pullback is. So let's continue to go back. Here was, again, these were all good buying opportunities. You see the MTPredictor produced buying opportunities when we got below the weekly 50 period, above the 200 period on the monthly, the weekly chart. Buy signals, excellent buy signal here. Anytime gold has come below the daily 50 period, above the 200-day, or below the weekly 50 period, above the 200 period on the weekly chart, you can see these were all good. Wave 2 here. Been good buying opportunities. Now this goes back all the way, basically back to 9/11 of 2001. That's when basically this gold bull market began. So we go back, here's January of 2002. You can see the 50 period crossed above the 200 period. And that started the uptrend in gold, the bull market in gold. And you can see the 200 period has never been violated in the last 10 years. Alright, so this trend is absolutely 100% still intact as far as the gold bull market. So don't be fooled. We just have a simple pullback in a major uptrend. If we get a close below the weekly 200 period and that low gets taken out, then you have to start thinking maybe that trend is over. But that hasn't happened in the last 10 years. So that's kind of bigger picture of what you're dealing with in the gold markets. Silver, same thing. Here's the weekly chart of silver, much more volatile market. It's a smaller market. You can see we got a major wave 3 up, which was our test of the all-time highs in silver. That unfolded as an ABC pattern into wave 4 here, which is where we are. We get a TS4 buy signal in silver if we get to 34.10, which we haven't yet. So the stop would be at 25.60 there, with your target a little better than 2.2 to 1, or right at 2.2 to 1 of 52.80, which would be a new all-time high there. So we'll see how that plays out. Your dollar index, remember we had our major lows. We had actually DP buy signal in the dollar back in May. This is the weekly chart. Now we've been looking at the daily chart, which we know we've gone wave 3 up on the daily. You can see the target for the decision point trade here around 82.53 and change on the dollar, so that's where that is currently. And then finally the oil trade came close to the target at 74.61, hasn't hit, so obviously stops at 88.20 as a minimum. So you can't lose on the trade. We'll see how this remainder plays out. If it does roll over again, we shall see. Anyway, good wrap up of all the markets we've been following there. Hopefully that gives you a little more perspective, and we'll see how this week plays out. So keep in mind also that it is coming into earnings season here, and sometimes you do get those rallies. The markets do rally into earnings season, so we'll see. Obviously we have been moving higher the last few days, and we'll see as we get closer. I think not much economic data this week. I think Monday is actually a bank holiday. Markets will be open, but banks will be closed. Fed minutes on Wednesday, and then I think you get jobless claims on Thursday and retail sales on Friday. So those are kind of the biggies this week. Alright, so hope you have a great week of trading, and we'll see you back here next week.